And since we're on the topic of recession, I want to go over how to trade in a recession. So the easy way would be to tell you guys to not trade at all and
Hoard your
to
cash.
sit on your hands. Yes, hoard your cash. Pray to the finance gods that this is all going to end soon. But here on Two Girls One Trade, we want to help you, and we want to help you in any type of market. So,
and also I want to point out that like CNBC, you'll hear a bunch of people being like, "Oh yeah, like this is such a good buying opportunity, blah blah blah." They just want you to buy the dip so that they can exit their positions. Like, that's all it is.
Yeah, save us. And I'm not typically the bear. The trading chick knows more about leveraging with the NASDAQ and SQQQ than I do. She's talked about it in previous episodes, but for those that don't know what TQQQ and SQQ are, they are both exchange traded funds, or ETFs. So you've probably heard that a lot. If the NASDAQ index rises 1%, so TQQQ will rise 3% naturally. And SQQQ is the inverse of that. So if the NASDAQ falls that 1%, then SQQQ will rise 3%. So in theory, the SQQQ is definitely worth learning right now, and how to trade that in the next few months. So I'm going to kind of spend some time doing that, and who better to learn it from than my co-host. And also, there are a lot of YouTube videos on how to day trade inverse ETFs, and I'm sure that we're actually probably going to be putting one out, maybe do a beginner tutorial video, which would be really great for our audience to see. But back to trading strategies, one thing you can do to take advantage of the falling markets is to short. So that's identifying companies that you don't think are going to survive in the next coming months in the storm, and you can see their prices, their share prices potentially dropping. And unfortunately, in reality, this recession would include everything. So we're talking banks, retail shopping, e-commerce. We're going to start seeing some layoffs, and those people who lose their jobs aren't going to be taking out loans to buy cars, to buy houses. You can't fucking afford a house anyways right now. And they're not going to be buying things on new credit cards. So it's a lot. Trading in a recession is a lot. It's not something that I have had to do before, but this is where your risk management becomes so important. So we could talk a little bit about hedging. If you can hedge in certain sectors. You can use sector indices to hedge against specific stocks. So if I was going to trade with a banking index, that could be traded against a portfolio of banking stocks. Or you can go long as the markets recover. And I know a lot of people that listen to the podcast might not be day traders, you might be long-term investors, but that is another way to manage your risks. It's to just really hold your stuff. If shorting isn't your thing, then you can hold your positions and profit post recession recovery.
So what I'm doing right now is, because I have a long-term portfolio of stocks that I believe in for the future. I love those stocks. They've honestly been killing it on earnings. And like weirdly, I think now that the NASDAQ is starting to go down, they're starting to go up because they're reporting these amazing earnings, which I'm like so happy about. But regardless of whether they're going up or down, I don't really care, because my intent is to hold them very long term. Sometimes I'll trim my position on those stocks a tiny bit. So like maybe I'll sell 25% of them if I think that there's further decline coming, or if they pop really hard during the day. Like if they go up 20% one day, sometimes I'll take a little bit of profits, and then like with the intent of buying back at a lower price because I see a different opportunity coming. But what I've been doing in regards to my long-term portfolio is, like you said, I'm taking advantage of the triple leveraged inverse ETFs to the NASDAQ. The NASDAQ is on a decline. It's evident by the series of lower highs and lower lows. So that's like when a downtrend happens, and like it's like lower low, lower high, lower low, lower high, lower low, and it just keeps going. So right now I'm taking advantage of that with my SQQQ. I have probably 25% of my total portfolio value in SQQQ. My intent is probably just to hold that through the summer, maybe to October, and trade it like a tiny bit as, you know, we make those higher highs and lower lows. Sell here, buy here, sell. But not with all of it, because I'm really trying to hold that as a hedge. So that's like my protection. And then also I talked about this last week. A lot of my portfolio is long the commodities that I think are gonna experience a tightening in supply. So I have a lot of my portfolio in metals. That is also important for electricity. It's important for batteries. And as this oil thing has a lasting effect on the market, I think a lot of people are going to turn towards a lot of battery manufacturing, chip, and all of that stuff needs metals and rare earth metals. So I have a lot of that in my portfolio right now. But I also have like my speculative small caps that I love ever so dearly.
And that's what you're trading, you're swing trading, correct? Your small caps?
No, my small caps are my long-term hold. Like DM, I'm not selling for 10 years. Hims, I'm not selling for 10 years.
I freaking love Hims.
It's such a fun company. Their advertising is so good, and they're so cheap right now. But I already have a full position, but I still love them.
Hi everyone, we have a very exciting announcement for you today.
If we hit 100,000 subscribers by August 26th, one lucky fan will have a chance to hang with us in New York City.
It gets better. You won't be coming alone, you'll get to bring a friend.
We'll fly you both first class, stay in a dope hotel, and go on a double date.
With us at one of New York City's most exclusive restaurants. We will sugar mommy the whole thing.
We have fun activities planned for the entire weekend, including $5,000 to each of you in any currency you choose.
So hit the subscribe button and we can't wait to see you in New York.